videos that...
It's basically just like, bam, all right, it's like a conversation.
That's what I just started doing, like, on Wednesdays, like, just, like, stupid videos. And then, like, at first I was like, what are you doing? Like, now it's, like, a little more, like, okay, now I know what to do.
No, same thing, because when I was doing the video editing, I was like, I looked so nervous. I was, like, just so stiff, and I was like, man, I don't know, like, I'm probably just, like, look at the camera.
I feel like I almost wanted to be like, just put a camera, don't tell me, let's have a normal conversation, and then, right?
Yeah, exactly. Looking to buy, sell, invest in the San Francisco Bay Area? Visit us at our website. Let's get it!
But I just feel like, in general, when everyone's like, oh, that's such a bad market, I'm like, no, if you want to buy, it's actually better than it was last year.
Yeah, no, exactly, yeah, for sure. And it's crazy because, like, man, like, if people keep thinking it's a bad market, then they're going to, like, lose out. It's not about, like, if it's a bad or good market. If you could do it, you know? That's always, like, I try to, like, really just tell people, just do it. Because, like...
even as, like, investors, I'm starting to see a lot of people buying to it. Because they had paused. Because they didn't know where the market was going to go. But I'm seeing a lot of people investing right now, maybe not in your typical, you know, single family residence, but a lot of, like, in Stockton, like, not in San Francisco, how would I say, like, not in your immediate Bay Area.
Yeah.
But Stockton and Sacramento, a lot of people are reinvesting over there again because those prices dropped tremendously.
Oh, yeah, I heard
tremendously.
They did a little bit. And then... Yeah.
So for investment purposes, and you could, I actually know somebody who invested and got seller credit.
Damn.
So she goes like, there goes my closing costs.
Yeah. So I mean, yeah. So that's why, like, I really believe it just doesn't matter what type of market. It's not bad or good. I think it's better, like, especially now for buyers, just because, right? You know, higher interest rate. It might be that, but you know, they are planning to, like, eventually just drop in. That's where you actually make most of the money back, right? When they do drop the interest rate.
Yeah. And then, like, the rates, if you get it a little bit higher, like you said, you could refinance later. So you got into the house low, and you'll be able to refinance. And you got in knowing your payment and that you could afford that. So then it's going to be a little extra bonus when you could refinance and your payment drops.
Yeah, hell yeah.
So that's a major bonus right there that you got in, and then it'll drop a little bit. And then just with rates, I know they've been up and down. Like you said, the Feds said they were going to raise it again. We did see a big drop last week in rates from 7 to... You could get it in the 5s, like 5.5 I've been seeing too. Damn, so that's a big drop. Paying points down, you could get it in the 5s, but it might go back up.
Yeah, but 7%, that's
It was
crazy.
at 7. It was as someone with over 800 credit. I qualified them when it was like the highest day, and they were having to pay points at 7.125. So...
And you know what's also pretty good, too, is that there are a lot of programs that help with, like, that, too, right? Like, is a 2-1 buy-down program still available?
That 2-1 buy-down that's what I'm seeing a lot of people do right now. And the good thing with that program is that you get in, you know the rate, you know what's going to be after 2 years, which, let's say, okay, after 2 years, it's going to be 7%. But within that margin, you know, first is at 5, at 6, and then at 7, you could refinance. And worst scenario... 2 years later, 3 years later, you know what your payment's going to be. It's not a fixed rate like, oh, what's going to be? Could I afford it? Could I not? No, you're going to be able to afford it because you know what you got.
And it's not ARM. It's not ARM, right? Yeah, so, adjustable rate mortgage.
That's a lot of people. A lot of people that were very nervous with the 2-1 buy down for that reason, because they were like, oh no, but I don't know what my rate or my payment's gonna be. No, we tell you exactly what your payment's gonna be after the 3rd year. You know, and we qualify you based on that high interest rate, not on the low one.
Yeah.
So if you could qualify for the 2-1 buy down program, that means, you know, we qualified knowing based on everything give us, you could afford it.
Smart.
Yeah. So that's a really good one.
Yeah.
We definitely saw an increase today with applications, like for the Cow Halfa, the Dream program that came out today. So a lot of people applying for that. They give you the 20% down either towards your down payment or or closing costs.
I bet everyone was waiting for that. Like.
Yes, you do have to pay it back. You do have to pay it back, the 20%.
That's right.
And a little bit of interest.
But you don't pay it back like in terms of like a loan, but you pay it back through the equity of your house, right?
Yes. Yeah. Like once you got equity, and then you could refinance one time without having to pay it back, or you could wait, and then when you feel comfortable, okay, my house went up, I'm ready to give them the 20% down back, then you could do it then. But it's a good program, especially there's a lot of people that don't have the money to buy a house.
Exactly, they just need a house. It's like it's worth it.
It's really worth it. And then once you pay that 20% back, it's your house. So anything that, if you got at 500, it goes up to 900. That's after you pay them back, the state of California back. That's all your equity. Yep. You didn't have off, basically free money.
Yeah, it's 500,000, 20%. That's 100,000.
100,000.
That's not bad.
No, and it's money that you wouldn't have. That's how I see it. Like, it's a house you wouldn't own.
Yeah, and it's a great start too. Like,
it helps you get started. It's a great start.
Yeah. So there are a lot of programs, a lot of stuff. So definitely, I think it's a buyer's market where everyone's trying to just get in. I think now's the time. People are gonna say like, I'm just trying to wait till like it crashes, everything like that. It's not gonna crash.
I feel like everybody's really been waiting for the crash
for like 2 years
for
now.
Three years.
Yeah, since the pandemic.
They were like, no, pre-pandemic. They're like, oh, it's gonna crash. It's gonna just wait. It's gonna crash, and then the COVID happened, and it definitely didn't crash. Yep. Everyone was putting $100,000 over.
And I think this is like why another reason, like, it's like if you could do it, you could afford it comfortably, just do it, because then you never know what's gonna happen in the future. No. Like it might actually increase, so you actually lose out on what could happen, and then like that's why if you could do it now, take the chance and do it.
Absolutely.
Just it's better, and also like when you get pre-approved, at least you know where you're at in your pre-approval at this point, and then you can kind of work on getting to where you want to be.
Oh, with the pre-approvals, I've seen people that were like, oh, my credit's horrible, I can't buy. And then we run the credit, and their credit's 700. Yeah. So they were able to buy a lot sooner than they even thought they were going to. And then I've seen other people who were like, my credit's great, and their credit needed help. Some help. So we're able to help them, like, hey, if you do, have a plan for them. And some people have the money to pay it off, so it's fast. Other people do have to wait a year or two to pay it off, and then but they know where their credit's at.
Yep.
And even with the income, some people are like, oh, I can't afford it with my income. And then we run the, everything, their credit, how much they make, and they could afford it.
Yeah.
So that's what's really important to get pre-approved, just to know where you're at. It's free.
Yeah, exactly. That's the most important part. Free, right?
It's free.
F-R-E-E.
It's free, and it gives you a good idea where to start and how long it's really going to take. A lot of people, I've gotten so many people that were like, oh, I can't afford a house because I don't make a lot of money. I can't afford it. Oh, I don't know. And then once they come to me and we start the process, they're able to buy.
Yeah, but they don't know until they actually do it, right?
Yeah, another thing is like what we're saying. Oh, well, I don't have money. I only have $2,000. Well, there's so many. There's not just this Dream for All program. There's California actually year-round has multiple different programs. There's programs for if you're a doctor, if you're a nurse, if you're a teacher. There's so many programs out there.
And sellers are helping now, too. Yeah. Sellers are helping pay for those closing costs.
Yeah.
So, it's like... but yeah, so getting pre-approved, like, it's free, and it's like, why not just take the chance and, you know exactly where you stand.
Yeah.
So.
And and another, like, a great benefit of that, too, is, like I said, if you know or don't know about your credit, we help you, guide you we have a system that helps you, guide you what direction you need to do to get your credit up. Yeah. So a lot of people that come to us are like, oh, I'm waiting to pay off all my debt. And then they come to me, and I'm like, well, actually, if you pay your debt off, it hurts your credit versus helping your credit.
Yep.
So the importance of knowing, just getting pre-approved, knowing what you need to do, with your credit, not paying it all off. Sometimes it hurts you is really important.
And then I think also some pretty important too, because if you're just looking to get in a better financial situation, I think getting pre-approved also just helps you kind of determine a path of where to go. Right?
Yes.
You know, like, so
Yes.
it's definitely, I believe, is like should be the first step. If you don't know where to start, probably start with the pre-approval, right?
Yeah.
Yeah, just go from there.
And like you said, it's free.
Yeah, it's free. It's not that risky.
Another thing that I don't want to get pre-approved because I don't want my credit to go down more than it is or something. They're worried about their credit score. With mortgages, your credit score normally does not get affected. It doesn't get affected like it does with a car or a credit card. I usually tell my clients, like, maybe it'll drop 0 to 3 points. Most of the time, I don't see any points being dropped. You could go with up to 3 different lenders and it won't get affected if you want to shop around.
Yeah.
So that's one thing that a lot of people don't know, and they're scared, like, oh, I don't want to drop my score, but it does not drop. Yeah. Like I said, I have not seen it drop on any of the clients that I run.
Yeah, so that's why there's like barely any cons to it, just do it. Do it.
Yes, do it now. Call us. Call us and get pre-approved.
Take the chance. But I mean, I think other